Hello and welcome to CMC Markets on Tuesday the 16th of July and this week's weekly market update. Today I'm going to be looking at markets from a dollar perspective. I'm going to be looking at cable, given the fact that we've got an awful lot of sterling data this week. We've already had inflation data early this morning that came in slightly softer than expected, 2.9%. We've also had US CPI data, which has come in slightly above expectations at 1.8%, driven largely by a significant increase in gasoline prices in June, and also be looking at the Australian dollar and the potential for a bit of a bounce back in that particular currency pair, given the release of the RBA minutes early this morning, which seemed to suggest that we may not get a rate cut in August after all. Now, obviously the backdrop really this week, and I think the key event this week, it's not just about the US dollar, it's also about Mr. Bernanke, his biannual testimony to Congress on Wednesday and Thursday. But more than that, we've also got Mr. Carney, the latest minutes from the Bank of England from earlier this month, as well as a whole host of UK data. Is there any further downside in the pound against the dollar? Is there any further downside in the pound against the euro? And is the euro likely to see a bit of a bounce back to 134, 135? All of these things I'm going to cover in the next few minutes. So let's start with cable. Now, this morning, inflation data came in at 2.9%. It was below expectations of 3%, and we saw a bit of a sell-off in the pound. Now, as we can see from this daily chart that I'm just about to put up on the screen in front of you, we can see that there's a significant area of support around about the 150 area. There's also a very, very big support at 148.30. Now, you may recall from previous videos that I've done on cable that the really big level is around about the 147.80 area. And I think if we break below that, then we're looking at 142.30. In the short to medium term, if we look at the daily chart that we've got displayed, we can see that there is a bullish engulfing day, which we saw at the end of last week. Given the fact that we've now broken back above 150, there is potential for us to go all the way back to 152.20. If we break above 152.20, and there's no suggestion that we can't do that, and that will be dependent on the data that comes out later this week, the content of those minutes, the likelihood of further QE. I still remain very sceptical that that might happen, so we need to keep an eye on the voting patterns from those minutes tomorrow. Will it be 7-2, or will Mr. Carney persuade Mr. Fisher and Mr. Miles to reverse their votes for QE and have a 9-0 majority against further QE, given the fact that Mr. Carney has talked about forward guidance going forward. We've also got retail sales later this week, expecting a rise in retail sales as well for June of around about 0.2, 0.3%. Still not as good as the May numbers of 1.2, but nevertheless still pointing to a fairly positive growth forecast for Q2 GDP. So really focusing in on the key levels on cable, 150 on the downside, 152.20 on the top side. A break either side of that should determine future direction. One other thing, have a look at the dollar index. I'm afraid I can't show you a chart of that, but on the weekly chart we've had a bearish reversal. So that in itself could suggest that we could well see further dollar weakness. And that's particularly important when we talk about my next chart, which is the euro dollar. So as we can see from this euro dollar chart, which I'm just about to display, we had a similar sort of rebound on euro dollar in response to those Bernanke comments last week. Two successive strong up days, bullish engulfing days. We ran out of steam around about the 132. We've since come back. We're currently holding above the 130 level, and that's really a key line in the sand for me. If we drop back below the 130 area, then once again the 127.50 area remains a very, very key level on the downside, as shown by the horizontal line from the March and through the April lows. The oscillator is still looking fairly positive, so if we can break through 132, then the odds are that we could well head back all the way to the highs that we saw earlier this year, around about 134 in June. So those are the key levels to keep an eye on euro dollar. So let's wrap things up with the Australian dollar. Now, this morning we had the latest RBA minutes, and you may recall that the last rate meeting, the governor of the Reserve Bank made some joke about the fact that policymakers deliberated, easy for me to say, deliberated an awfully long time about the need for a rate cut or not. Now, those minutes that came out this morning suggest that we will not see a rate cut in August. And that does seem to suggest that we could well see a bit of a rebound in the Australian dollar. You've also got to put it in the context of the decline that we've seen since the April highs around about 105, 106. We've come all the way down to around about the 90 level. We do appear to be finding some form of a base. Now, we did see a bit of a sell-off towards the end of last week over concerns about Chinese growth. We've seen the Chinese data come out. They basically came in broadly in line with expectations, even if industrial production was disappointing. But I think this particular trade is going to be more denominated by the direction of the US dollar than by the RBA, because I think the prospect of any rate cut has receded somewhat in August, and as a result we could see some significant short covering in the Australian dollar, and the price action does seem to suggest that while we hold above the 90 level. If we move it onto the weekly chart, we can see that we seem to be forming some form of a base. That will be confirmed if we break above the 93.40 area, which I actually draw on the daily chart, which we can quickly go back to. But also, if we look at the weekly chart, we can see that if we are able to sustain the gains of this week relative to the previous 3 weeks, then that should be a fairly positive indication that we could see further gains and a short squeeze in the Australian dollar. And if you actually look at the oscillator on the weekly chart, we'll go back to that, you can actually see there is certainly potential for a significant rebound. To conclude, one other thing. Everywhere I look and everywhere I see, people are talking the dollar higher. That suggests to me that everyone is the same way round. That also suggests to me that we could be very susceptible to a short squeeze and a US dollar sell-off in the short to medium term. It's certainly something to be aware of. So that's pretty much it for this week. Don't forget, keep an eye on the Bernanke testimony, the Bank of England minutes. Those could be very key drivers for the US dollar's direction going forward. As for this week, thanks again for listening. This is Michael Hewson talking to you from CMC Markets.